All right, everybody that's joining us this evening, I see you guys coming into the StratiVentures webinar room. I've got Miss Brenda, Dr. Wallace. Let's see here, Stephanie. Okay, we've got people joining us right now. Tony, Miss Tina, welcome. All right, there you go. Mr. Mitchell, welcome. Mia, welcome. Mr. Lynn Deffenbach, good to hear from you, sir. Glad to know you are doing well, my friend. Mr. David Hurley, welcome. Donald, welcome. Brenda, it was a pleasure seeing you this past week in Denver, and happy that we're going to be able to work together with your new co-living units. All right, let's see here. All right, everybody that's joining us, please feel free to get yourself settled in. Our guest speaker, Jason Jimenez, is here already, and we'll be able to get started here in just a little bit. So feel free to get yourself a nice tea, right? Not like an iced tea, but a nice tea, because it's a little cold now, right, Jason? Yep. I think when I was meeting up with Brenda and her crew ball and her husband Mark, it was 4 degrees in Denver this past week.
Oh wow! Yes, yeah, we have no room to complain.
No. So I landed and I was like, wow, it's a nice 41 degrees and it's muggy and wet. I was like, I want to go back to the snow, which was nice.
Yeah, for sure.
Mm-hmm. What's new in the life of Jason Jimenez?
You know, right now we are launching our new affiliate program, and it's been a really big undertaking, but it's been great. We've just brought on 3 new individuals to the team, and they've been just incredible, you know, from the get-go. And outside of that, I'm just enjoying my weekends when I get to go to the ranch. So
nice. All right, so ladies and gentlemen, it is right now 6:33. We'll get started here in about 2 minutes. So feel free to get your questions ready. Today's topic with IMD Insurance and Financial Services, Mr. Jason Jimenez, we're going to talk about insuring your real estate assets in today's world. That's very important that you guys learn here, because Jason has a vast experience in real estate also and insurance. And I know Jason for over 20 plus years that we actually used to work hand in hand in the mortgage and insurance realm back then, when what do we call that? The Wild Wild West, the 2007s, 4s, 8s. So now we're in this level of real estate investing and mitigation, so risk mitigation. Let's see here. Let me make sure we are. Here we go. Yep, Mr. Mitchell from Bronx, New York. Welcome to the family, sir. You're one of our newest members, and we're super excited to have you on board, my friend. Let's see, who else do we have here? Sylvia, welcome. Mr. Richard Hall, welcome. All right. Marino Velasquez, just got off the phone with him while I was in traffic on the way here. So we've got a lot of people that are really interested in the insurance portion here, Jason. So with that said, let me go ahead and get this webinar going here. Everybody, good evening. My name is Diego Mello with StratiVentures. This evening, we have a very special guest, Jason Jimenez with IMD Insurance and Financial Services. And we're going to be discussing insuring your real estate assets in today's world, because the world has changed, right? On not just what's going on, not what's happened in the past 2 years, but it's an ever-changing world in real estate. Does not matter what is going on in the rest of the world. Just remember that real estate is constantly changing. That's why I strongly believe that this topic that we're going to be speaking about today is very important, because insurance is such a great tool to have. We're going to start the webinar now, get into our topic information, and then closer to 7:10 or so, we'll jump into the attendee Q&As. For those of you that are joining us on Zoom, we encourage questions. So please make sure that you put your questions in the Q&A section of your Zoom window. And if you have any questions in regards to off-topic or non-questions, send them over to the chat where we have Enid and we have Oriana that is joining. They're from SVI that are joining to answer those questions that you might have. And as I like to say, if the topic or you just don't want to hear us anymore, hit the leave button right here where it says end. And then hopefully we'll see you on 2 Mondays from now, because it's every other Monday that we hold our webinars. A little bit of background about myself, guys. I started investing in real estate back in May of 2012. I was born in Colombia. I'm married. I have a beautiful wife, Kate, and my son, Aiden, who's a freshman at LSU. And I've been investing since May of 2012, and now SVI has grown over 2,100 members, and we're now in over 27 states, Jason, where we have our member base, because in 2020, the world opened to us to the ability to do things online, which now I think everybody's really connected. My company was established in 2012, and we are a full service real estate investing company, which encompasses 4 prongs, which is the acquisitions analysis, real estate services, project management services, and funding. So in a nutshell, every member that comes through SVI is a lifetime member, and they have a dedicated team that walks them through the full spectrum of real estate investing with low risk. Here's our team here. Our core team encompasses everything from sales and acquisition, real estate services, architectural and design, also contracting and material selections, and obviously financing and funding, which is, again, all the 4 prongs that our business has. So Jason, let me ask you a question.
Sure.
When you ask a lot of people, especially in the world of real estate investing, what does a real estate investor do? Do you always get many different answers?
I do.
Right?
Yeah. And I think it because there is a world of perception based on things that they've heard, whether good or bad.
Correct. And so guys, think about this. If everybody has a different perspective or a definition of the world of real estate investing, it kind of makes it very volatile, right? That means everybody's going in many different directions, especially in the world of real estate investing where things are risky, right? There's a high failure rate. So what is the definition of a real estate investor? Well, any of our SVI members will tell you that at SVI, an investor analyzes, acts, invests, and makes profit with one word in mind, and that's risk. We, at the end of the day, are risk managers, guys. And so we minimize the risk by working with a better quality team of contractors, realtors, lenders, and at the end of the day, wearing our hat of the investor and mitigating and understanding what risk we're going to take. We would love to find out more about you guys and work with us. And we have free one-on-one sessions that later on at the end of the presentation, you'll be able to learn how to get those. And these one-on-one sessions are where we get to find out who you are. You'll get to find out who we are also, what we do, and how we can all benefit from each other. And trust us, it's worth your time. So I'm going to introduce our guest speaker for the evening, Jason Jimenez, IMD Insurance and Financial Services. And Jason, what I'm going to do right now is just release the presentation and you take over the share and we'll get this ball rolling here, guys. And I want to thank everybody that's joining us this evening, because we are very excited to have this topic, especially Jason that's joining us this evening. So welcome, sir.
I appreciate you having me. Let me get this up real quick. All right, there we go. So, Diego, I really appreciate you having me, and you and the StratiVentures team. It's really has been an honor in getting to work with each other again in these in the last couple of months, and a little bit about myself to everybody here. I actually created IMD Insurance Financial Services, and as it states in the bottom, IMD stands for Inspire, Motivate, and Drive. Why? Because quite frankly, it's for me, it's important to find out what that is for every person that I work with, regardless if they work with me, alongside me, within the company, or if it's a client that I serve. and their particular interests. I got to figure out what inspires them, and I got to figure out what motivates them. To me, inspiration is all about the energy that you reflect. Motivation is, to me, fundamentally the actions that we take to be able to really find what really drives someone. And my job is, if somebody asks me what I do for a living, and if I put my insurance hat on, I protect people's shelter, their transportation, their business, their life, and in today's world, their identity. And so I do this by providing insurance products. And I do this because when something ends up happening, it creates a ripple in the world. And my job is to give you the monetary needs so you can focus on what's most important to you. It could be your family, your business, or wherever that one thing is. So a little bit of background about myself, we are a company that was established in November of 2099. And since then, we have been ranked in the top 1% of the country as far as one of the top insurance companies in the nation. To talk about a little some of the accolades that we've won as a company, just recently in 2020, we were named by the Houston Chronicle here in Houston, Texas, as being one of the top insurance agencies in the country. And in 2014, we were nominated by the HBJ as the 40 under 40 winner. In 2012, we were named as Businessman of the Year as far as some of the accolades of the company. I do not share with you simply to impress you. I share this with you simply because I want you to know that this is my life. One of the greatest gifts that I have, I believe, is to be there when somebody truly needs us. It's either when you had a hurricane, you had a flood, you had a robbery, someone passes away, and you're a car accident. Either way, it's irrelevant. My job is to provide you the peace of mind when it ends up counting. A little bit of background about myself. I am also the owner of a company called Redstone Business Holdings, which is a capital consulting firm. I've been in real estate since probably over 14, 15 years. I started out in the residential side. I was a realtor for a period of time to understand what the realtors did to be able to actually acquire a listing and even acquire a buyer. And then I was in the mortgage industry for several years as well. And you may be wondering, it's like, well, why would you get involved in that? And the answer is because those are the people that I do business with. I work with investors, and I've been working with investors for well over 22 years. And my job was to be able to understand the whole process around the whole ecosystem. And that was important to me because I needed to be able to look you in the eyes and tell you, yeah, I get it. I get that it's not an easy job. I get that sometimes it's really, really beneficial. And sometimes it's not. Sometimes it's a hard work. And so my job is to make sure that I got educated in the things that were really important. And why do I share that with you? Simply because of the fact that I want you all to know that I come from a background of really understanding what it means to be of service. And what it means to be of service is being holistic. I don't need to know everything. I just need to know what I need to know. And everything else is a resource of knowledge of people that I've put around me to be of service to the clients that I serve. So on top of that, as you may see under Redstone, we also own a company called Shield, which is a cybersecurity counterintelligence company. Outside of that, I currently am, like I said, in the real estate. I started out in the residential. I'm currently in the commercial. We currently own about 700 doors in the commercial realm. I just recently sold an apartment complex, so we're down to like 400, and we're getting into some new development that we're working on in hopefully in the next month or two. Our purpose, and that's really important because I think that when you get to know somebody, you got to know what their purpose is. And mine is, and for everything that I do, is to be of service to faith, family, and business with integrity, because without it, nothing works. And that's something really important. And I really instill that within everybody that works with us and everything I do. Now, what you don't know may hurt you. And that's a big theme about insurance today, because in the world of technology, since the pandemic, people are utilizing computers and systems and technology more than they've ever have, including the fact that kids are now utilizing it as the way to communicate themselves, whether it be virtual reality or not. But real estate is no different. And today's topic, we're going to be talking about mitigating risk, because some of you may just be starting out in the real estate industry. Some of you may be seasoned. Either way, you still come across the same issues and problems in the areas of risk mitigation. So What does that mean in today's world in being able to mitigate your risk? Well, I'm going to start off by basically talking about is like, how much does business insurance cost? Well, there's several factors to that, right? So as it states here in the screen, it says, here's some of the biggest factors that insurance providers take into consideration to calculate the cost of your business. You have to take into consideration the very first moment where you decided, I'm going to get into real estate investing. I'm going to purchase a property with the intention of making a profit. I want you to consider you stepped into entrepreneurship. And being an entrepreneur, it means that you had to be able to start a company. Now, here's some of the things that we look at from an insurance perspective: your business trades and specialties, the services you provide, where's your business located? Geographically, it really matters. Not only because it's by state, by region, by zip code. Insurance companies absolutely look at that as far as being able to rate your insurance policy. How many employees do you have? Your estimated revenue that you intend to make within the next 12 months. Do you have, for example, have you started a business before? Now, take into consideration that if you've been in business for several years versus somebody starting out in a business, there's a huge difference for that. And look at it from an insurance perspective. The insurance carriers are looking at it saying, does this person come with experience, or is this person coming with no experience and they're just still trying to figure it out? But there's a but. And I don't like that word because I usually think that it negates everything that it's about to say. And it typically does. And so when it does, when I use the word but, it's intentional. Here's the but. If you create a real estate company, if you create a real estate investment company as going into real estate, I want you to consider most entrepreneurs are really good at that one thing. Sometimes you're able to hire outside of that of individuals that bring in skill set, capacity, and want to be in to do business with you. Those individuals that you actually bring to the table as your operating team, which is your leadership team or your management team, or simply just the people that you work to be able to deploy the things that are needed, their resumes are very valuable. So as you're getting into the business and you're getting insurance quotes out there from, whether it be from us or from somebody else that you work with, I want you to consider that you want to share what your team's experience is. Because if you lack the experience, but you've built a team around you, like StratiVentures has been able to provide for you, that gives you credibility. And it gives an insurance broker the ability to work on your behalf to lower interest rates simply because you have hired experience versus depending upon your own experience if you're just starting in the real estate industry. And that will help you reduce your costs. Do you work with subcontractors? And a lot of investors, I can tell you that I work with it. I tell you that a lot of them subcontract, which is completely fine. Not a problem. Just want to take one thing under consideration. Make sure those individuals are insured, because you are, at the end of the day, you are the investor, you are the business owner, you are the general contractor, you are the person in charge. Everything always falls back on you. So you want to make sure your subcontractors have the proper insurance and the proper experience to be able to do their jobs, because it reduces your risk liability for that. And last but not least, what is your estimated revenues for the year? Why is this twice on the document? It's because it's that important. Insurance is based on two different things. Your business insurance is going to be based on the amount of revenue you make versus the amount of employees you make. Now, you may say well, I'm going to make a lot more money, but I don't necessarily need a lot of employees. Not a problem. But I do need you to be aware that some of the factors that the insurance companies base themselves off is the more money you make, the more employees you end up hiring, which means the more liability exposure that you have. So insurance is going to be using that as a baseline based upon all the criteria that in history has told us that what the probabilities of a claim to be. Now, you have a business. You have pretty much two main options. You can create a sole proprietorship, or you have a limited liability company. And then what's the difference? And for disclaimer purposes, I am not an attorney, but I can tell you that I am someone who has purchased, bought, sold, created multiple companies, And what I can tell you from an insurance perspective, from an advisory perspective, is it's irrelevant to me if you buy the house as a sole proprietor. And to those who may not know exactly what that means, is you're buying it under your name, right? So you're buying it under Jason Jimenez as an example, versus creating an entity as an LLC, if that's the route you want to take. There's multiple versions of an entity that you want to create, but let's just say that the standard one and the normal one in real estate is by opening up an LLC, which is a limited liability company. What's the difference? Well, the difference is, from an insurance perspective, is there isn't any. I'll still be able to insure you, or an insurance brokerage firm will still be able to insure you as a sole proprietor versus insuring you as a LLC. But here's the main caveat. As a sole proprietor, if you get sued because of something that you are liable for, the probability for someone to get closer to your personal assets, your retirement, your savings, everything that you work really hard for, it's a lot easier. Why is it advisable to go in and create an entity? It's because of the fact that you have a separation between, and there's a wall that hits between you, the entity, and you as the individual, and separating that out. You have the ability to separate that so that someone doesn't necessarily go after all your hard-work retirement, your savings, your IRAs, everything that you work hard on. Second point, investment properties, an investment property or your 20th investment property. Is there really a difference? Well, there is. There absolutely is a difference. I cannot express to you the importance of understanding that an insurance brokerage firm needs to be an extension of your business. It needs to be part of your team. And here's the reason why. And I think you can agree with this. You are not the same person you were a year ago. Well, guess what? Your business won't either. Your business, your real estate investment business, is not going to be the same every 12 months. Something's always going to change. It is imperative for you to be able to communicate with your insurance broker where you are today. What does your vision look like? Where are you taking it? And what are the potential risks that you will be facing as you scale and grow? Because there's a difference between cash flow and building cash flow and asset versus flipping. There's a huge difference. And depending upon the model that you decide to take, or if you even do both at the same time, which is very possible, it also depends upon your business plan, your intention of how you're going to get into the real estate. Why? Because everything that you work for, and I'm just going to go and say it, your legacy is dependent upon that. Don't waste your time in being able to just make movements without actually talking to an insurance advisor to be able to determine and to identify, here's where I'm at, here's where I'm going, this is how I intend to do that, so that an insurance professional like myself can guide you in the right way to ensure that you have the right insurance in place. So here's something to consider. General liability. General liability is the number one thing that you want to consider when you actually start creating your business. Now, mind you, you can buy it as a sole proprietor, which is you're buying the property under your name and you haven't created an entity yet. Or if you have an LLC or you have another form of a corporation. The general liability works either way. It's a general policy that protects against liability. Moving forward, what I'd ask everybody to consider is that a liability, by definition, equals lawsuits. So a general lawsuit protection policy is what we're getting. Now, one of the things that you want to make sure you take into consideration is that a general liability insurance can ensure that any legal claims don't end up draining your bank account. Why is that? Well, because of the fact that your policy that you purchase, here's your business, right over it, what ends up happening, you're putting a general liability policy to protect against any lawsuits that come against you, whether it be as a sole proprietor or as an LLC. Now, the question you may be asking is, well, how much should I get? Well, that really depends, and we'll get to that in the next slide. But for the time being, I just want you to understand that the general liability policy is to protect you against lawsuits against you causing harm to a third party by either physical and or any type of accident that happens to a third party. Now, what is a third party? That means anybody that does not live in the property, own the property, and or is part of the entity. Fundamentally, it's part of that. You're protecting against you yourself, the entity itself, and the owners of that property. So how much does a general liability cost? Well, there's some things to consider. What's the size of your business? Did I just start today? Or do I have a couple $1 million of assets? Do I have a couple of homes under management? Am I bringing in already cash flow through my rental property? Or have I flipped several homes within the last 12 months that have generated an XYZ amount of income? It really depends upon the size. Because remember, total revenue, amount of employees that you have is going to be an indicator. The type of work that you do, that's super important. Are you an owner operator, or are you owning the company, but you've delegated the responsibilities through subcontractors? Super, super important. That will determine your liability exposure. Why? Because your subcontractors may have their own insurance that, and here's a trick, guys, do not necessarily ever go by and get into a contract with a subcontractor without asking them to add you as an additional insured. It's a very low cost way of doing it and extending the insurance to make sure that if they do anything wrong, it extends the coverage to you so that you are protected as well. So that if something were to happen, your personal insurance policies are not having to file the claim on them because it was not done by you, because you've properly protected yourself simply by adding the clause, adding yourself as an additional insured to their policies. Number 3, your state's requirements. Please understand that every state is different. There are requirements by every state. I can't tell you that I'm an expert in every single one, but what I can tell you is that every state does have some nuances that are very specific to their industry. And last but not least, the project that you're working on. Well, what do you mean by that, Jason? Well, think about it. You may buy a home that's $50,000, it's needing $10,000 of repairs or $20,000 repairs, versus buying a $500,000 home that's needing $200,000 of repairs. The scope of the work and the scope of the project, subject to the amount of experience that you have, is always going to determine the ability for you to be able to see what the insurance company is going to rate you at. This is why, as I stated in one of the slides before, why your operational team that you've put together is super valuable. The stronger their team is, the lower the premium could be, because you've given confidence to the insurance company, to your investors, to the people you work with, that you'll get the job done. Now, general liabilities don't cover everything. And here are some of the things that you want to take into consideration. So the typical things that aren't covered are employee injuries and or illnesses under the general liability policy. Remember, it's against protecting you against lawsuits. Commercial vehicle accidents, punitive damages, professional mistakes, intentional mistakes, and even more. And again, subject to state regulations. Here's the other thing that you want to take into consideration. And this is something that I find myself having to teach, educate, and to emphasize to new investors, is builder's risk insurance is one of the type of policies that is a must, especially if you're living in the Texas and regional areas or areas that are prone to either hurricanes, flooding, and or any natural disasters, or areas that have a high probability of theft, vandalism, or crime. Builder's risk insurance, as it states here, or also considered as course of construction insurance, is specialized type of insurance that protects a person or an organization's construction project, renovation, or installation while in progress. What does this mean? It means that I just bought a property and I'm super eager to start working on it. You've already did the assessments between the before the repair costs and then after repair costs. You've estimated that the repairs are going to be, let's just say $15,000, none of it being structural, all of it being cosmetic. But then you know what? Then you go in and find out that within your inspection that you have to replace the roof because there was something there. I want you to take consideration that the builder's risk insurance policy will not only protect you for the time that you are repairing your home, your investment property, but it's also going to protect you against the materials that you buy to repair the property. Now, here's the important part. You need to make sure that the items that you purchase to repair are secure properly. Because if you leave the window open, if you leave the doors open, or if you leave them just laying there and somebody comes by and steals them, that doesn't cover it. Negligence and or anything that is something identified as something that is at your fault could be a reasoning for the insurance companies to deny your claim. But it also protects against natural disasters. So natural disasters, it's imperative for you to understand that fire, lightning, windstorm, hail, tornado damages, even if a car just lands on your house, or there's a falling object because something from space landed, all of that will be protected on your items for your home. Here's some of the things that, as I just mentioned: fire, damage for wind and hail, lightning strikes, theft and vandalism, vehicle or aircraft accidents. If I want you to be aware that if it's an act of God or something that is out of your control, it would more likely, as long as it's part of these particular items, it will be protected under your builder's risk policy. Please note, you have to give us an estimate. Is the job going to take 2 weeks? Is it going to take 3 months? Is it going to take 6 months or even a year? Whatever you estimate is what you're actually buying. But the moment you actually complete the job, it is only phase one. You then have to notify your insurance broker by being able to tell us what you actually completed, that your job is completed. More than likely, an insurance carrier will do a drive-by to validate that the property is being done properly, just to make sure that it is an insurable interest and that you're being taking care of it. We work directly with the lenders from time to time because they ask us to do an inspection. And then once you completed the renovation, it is imperative for you to notify the insurance broker, because then you got to transition it into the last policy, which is your tenant policy, your tenant dwelling policy, which is a policy that's designed for you to be able to protect the actual structure of your home and cover you against any natural disasters. But it's important. You need to be able to know that there are some things that are excluded, depending on the geographic area that you're on. Earthquakes, flood, water damages are not covered on a investment property. The act of war or government action, intentional acts, employee theft. So these are things that you need to be aware that are not covered on the policy. And it is imperative that you securitize, as I mentioned before, all the things that you handle on the property. But once you finish, please make sure that you transition the policy from a builder's risk to a permanent policy up until you either sell your property or until you rent it, which is called in Texas, it's called a Texas Dwelling Policy Form 1 or a TDP. And those policies are dedicated to protect you against all natural disasters for the structure of your home. It won't protect anything inside because you don't own it. But if you rent the property out, here's some things to consider. Number one, most people buy a property. They go on their way to invest it, but they fail to make sure that they're properly protecting themselves. And here's a vulnerability. The next time you buy a property, an investment property, regardless if it's for rental or if it's a flip, I'm asking you to consider putting on an actual by appointment only sign the moment you acquire your property. And here's the reason why. Because if you put a real estate sign, it says for sale. Well, by definition, for sale sign means it's an invitation that you're selling. You're wanting people to buy. You're wanting people to look at the property. If they walk onto your property, into your property line, and within the property line, they trip, they fall, or they get injured, or there's something that ends up happening there, thus they have the ability to come back and sue you. Well, let's not make it easy for them. Simply putting a by appointment only sign gives you the ability to give a arm's length distance from the actual individual that did not have permission to go onto the property to look at it, to look through the holes and look through the window. Number two, the moment you end up finishing your construction, I want you to consider is that you have to make sure that you notify the company, the insurance company, that I finished the builder's risk. I just finished renovations. I'm now putting the house on the market, whether it be for rent or to sell. I want you to consider that the insurance company is requesting you to validate if that property is going to be vacant at any time. Why? Because there's a provision that you have to have that says property insurance policy provision found in most commercial property policies that's at several restrictions of coverages apply and typically vacant up to 60 days. It is imperative that you share this information, regardless if it's a commercial policy, a commercial property, or residential property. There's a vacancy clause that indicates that if your house is vacant, no one's living there, you have to notify it because it gives you limited coverage because it's not going to cover you against like theft and vandalism. Or it'll cover you for not theft, but it'll cover you for vandalism. The moment you rent out the property or the moment you sell it and you have somebody living there, at that moment, you just notify the insurance carrier. They'll take the vacancy clause and give you the coverages that you need as the property is properly insured. Last but not least, most people don't consider this as an important part, and I'm asking you to consider it to protect your interest. You work really hard for what you do. You've going through this program with StratiVentures to be able to build it right. If the apartment complexes, if you've ever lived in an apartment, if they themselves are requiring all tenants to have renter's insurance, why wouldn't you? Think about it. An insurance policy is designed for the people who live in the property, who do not own the property, but live in the property, against protecting all natural disasters for all of their personal items. But at the same time, it is protecting one thing for you. There's a line item in the renter's insurance policy. It's called a personal liability. Now remember, general liability, it's for commercial. Well, your residential renter's insurance has a personal liability. What does that cover? If the tenant happens to have a party or happens to do something to a third party where they injure them, they hurt them, they kill them, or something ends up happening that is out of the control or within their control, they now have protection against lawsuits for themselves. It'll hire them just as a general liability. The insurance company will give you an attorney, will pay for all legal expenses, all court costs, up until the limits that you have purchased. So I'm asking you to consider that when you buy a property and you're going to get a tenant, ask them in your contract that they have to prove to you that they have renter's insurance. And if you work with us, we'll be part of your process, we'll be an extension of you. We'll work with that tenant to get the property insurance. And here's what I'm advising. I'm advising you to require within your contract that they give the maximum amount, which is at $500,000. So that in case something does happen, that individual tenant has $500,000 where the claim ends up filing against. That policy for the renter's insurance policy protects it. It blocks it from going after you. But I do want you to take under consideration, it doesn't mean that the person who is hurt or injured, it doesn't stop them from suing you or including you into the lawsuit, but it does mitigate the amount of exposure you have from a monetary perspective. So that $500,000 policy goes to your renter's insurance policy, and then the general liability, if and when it applies, would pick up the difference. Because think about it. Why wouldn't you put other people responsible for something you can't control? With that being said, I do want you to know that as you're building up your empire of real estate, there's a difference between buying one individual insurance policy for each individual building or property that you buy, and you buying individual policies. Please take into consideration, we also have the ability to simplify your life. It's called the blanket policy, where we basically you buy one policy for covering all 3 of your buildings, or all 7 of your buildings, or all 10 of your buildings. Wouldn't you rather have one payment that has the same coverage throughout versus buying individual payments, and which means causing you much more work, much more accounting, much more headaches? We try to eliminate that. And hopefully with that, you'll be able to have any questions. And I'm here to serve.
All right, Jason, well, that was great. Very good information there. We do have some questions that are being asked. So let me go ahead and stop your share here and then move right into that portion. Give me 1 second here. All right, Jason, thank you so much. There were a lot of great bits of information that you shared, Jason. I thought one of the most important one was the process of while you're in the project, as the project goes on, as things get accomplished, there's still that process of reporting to keeping yourself up to speed with your coverage. Guys, that is probably one of the most overlooked things in real estate, and it can hurt. You know, it can absolutely hurt your end result there. So here's Jason's information if you guys want to get to contact him. And let's go ahead, Jason, and move into the Q&A section, okay?
Absolutely.
Let's see. All right, get ready because they're coming in. So let's start with the first one here. This is from an anonymous attendee. Highest litigation states, question mark, lowest lawsuit happy states, question mark.
All right, so good question. And the answer is that I wouldn't answer it by a state. I would answer that every geographic area that you invest in, there is apps out there that you can investigate the crime and the amount of issues that a geographic area has. And that is different for every state and different for every territory. It's no different than the neighborhood that's across from you. The density of people that live there may be greater, which means the probability of having more claims would be greater, which means the insurance may be higher. So just take that into consideration and apply that to wherever you're looking at investing. Absolutely do your due diligence on that. Okay,
that's a great answer there, because it's about mitigating risk, right? And the insurance looks at risk in order to go ahead and issue the cost of those policies. Here's another question. What about if you have a rental and it's your homestead and it's under a trust?
Okay, great. So it's your home. You can't have a homestead and have it as a rental as well, because your insurance policy won't allow that. If it is your homestead, that means that you live there. It is your residence. If you are renting the property, then at that point you have a completely separate policy. The policy as a homestead you're getting is what is called a homeowner's policy. So it's in Texas, it's called an HOA or an HOA plus 3, or depending on what categories you want and features you want, but it's under HOA. The moment you rent your property and you're no longer in the property, you then have to change that policy into what's called a Texas dwelling or a dwelling policy, which is intended for a second home and or for an investment property.
Okay, let's see here. The next one is the insurance companies keep increasing the amount of the insurance for your investment houses. I understand inflation. However, is there a reasonable amount or percentage that is justified? Let's start with that one, and then we'll move on to the second part of that question.
I love this question. So I'm willing to bet $1, maybe more, but $1. Let's just start from there. Most people, even on attending today, I'm going to ask you the question. When was the last time you reviewed your insurance?
Good point.
I'm telling you, insurance companies are no different than us as businesses. When we make money, when we make money, we get to spend more. Well, to an insurance company, that gives them the ability to provide insurance discounts. But if they lose money because of a hurricane, because of a natural disaster, guess what happens? They lose a bunch of money, billions of dollars, and guess what they have to do? They then have to increase rates to be able to, and they can't discriminate, so they have to distribute it all across.
I'm sorry, guys, 1 moment, please.
And
sorry about that.
No worries, sir. And so I want you to take into consideration that Sorry, but could you ask the question one more time?
Yes, I apologize for that occurrence happening there, Jason.
No worries.
It says the insurance companies keep increasing the amount of insurance for your investment houses, and I
Yeah.
understand inflation.
Got it.
What's a reasonable amount of percentage that is justified?
Wonderful. Okay, so that's the first thing. Insurance companies are going to always either increase because of losses previously, or they're going to decrease because they have profits. But here's the other thing that you don't take into consideration, and this is the reason why I'm pleading with everybody as a seasoned investor. I'm pleading, consider me or the person you trust as an insurance broker as part of your team. Communicate. Why? Because part of my job as the insurance broker is I'm always looking for new carriers that are coming into the market to be able to buy the market. They come in very inexpensively to be able to go and acquire new clients with the intention of retaining them over years. Well, what ends up happening is this. An insurance broker's job is to give you the lowest premium with the maximum amount of coverage. Mm-hmm. But knowing that the market is just like as volatile as the real estate market, I'm sorry, as the stock market, it will go up and down. But I will guarantee you this, insurance will never go down. It will always go up. But there's tricks in the trade that we as brokers have to look out for your interest because that's our job. So when that ends up happening, cost of labor, cost of materials will always end up going up. The law in geographic areas will change the law, like in Galveston, if you live in the coastal area. They have building ordinance that change, which means you can no longer, if you're going to remodel or build from scratch, develop, you no longer can use a 2x4. You now have to use this 4x4 or 4x6. Well, guess what? The cost of materials just increased because the law changed. The insurance company will pay for things like that. And so in the short end of the stick, the answer is this. Insurance will always go up, but just you get yourself a right insurance company, a right broker, and they will always look out for your interest to keep it as low as possible.
Very good point. Definitely a very good point. Here's the second part. What is the minimum amount / percentage of umbrella coverage that we should purchase?
Yeah. So first of all, in an umbrella policy, so think about it, an umbrella, right? You have it right over you. What does it protect? It's whatever's underneath. Well, an insurance umbrella is going to require you to have your insurance for your home and your auto insurance underneath your umbrella at a minimum. And what it's also going to require is that your home and your auto have the maximum coverage of liability coverage to the max. So on your home, it's $500,000. For your auto, with some carriers, it will go up to $250,000 in limits in order for you to qualify to get an umbrella. My recommendation would be the following. If you are interested in an umbrella, which I do highly recommend because it's very inexpensive, but yet we live in a litigious world. Anybody can sue you for anything. The question is, can they prove it? Right? So an umbrella at a minimum, you're looking about $1 million is where I would say a good starting point. And I would say it can cost you an average between $200 to about $400 on an annual basis. The
cost of a big screen TV nowadays.
Yeah.
Wow. Wow. All right. And thank you for the questions, guys. Keep them coming. We have here, how do you determine costs for policies such as vacant property and builder's risk, especially if the project is going to take less than a year to complete?
Oh, I get this question a lot.
You do, because you work with our SBI members, and so that's great. I love it.
So I want you to consider that regardless if it's your personal home or if it's your investment home, it's still being protected against the same thing. All natural disasters, fire, lightning, windstorm, hail, tornado, smoke damage, falling objects from the sky, an explosion that was out of your control, riots, malicious mischief, vandalism. It's irrelevant where it comes from. It's still the structure, regardless if it's your home, your primary residence, or it's your dwelling that you're investing in. That is your highest expense. So your insurance policy isn't necessarily going to be very much different from a primary residence versus an investment property, because that is the biggest expense that you're covering. And depending on the geographic area that you live in, well, that's going to be rated accordingly. Everything else that you add to the policy is subject to what your individual goals are for that property as an investment versus somebody where you live as a primary residence.
Great. And at any given point, if the person has questions, don't speculate, directly talk to an insurance professional to help you with that.
Yeah.
So that Jason's information is right there. Jason at imdins.com. Feel free to send him your contact information and your questions. Bliss Mitten out of San Antonio, one of our members asked, how does renters insurance work with short-term rental houses?
So renters insurance, first of all, it's a pass-through, right? So it's not something that you purchase unless you want to, and unless it's dictated in the contract that you were going to buy it on behalf of the person who's renting your property. Okay, so just take that in consideration, number one. But it's typically done as a pass-through. You're just in the contract requiring it for them to prove that they have insurance, renter's insurance. And the policy is stated it is a one-year policy. It is not as a month-to-month policy. And yet, because we work with our investors, if you buy a property today and you rent it out for 3 months or 6 months, we do have the ability to basically do the following: open up the policy with a down payment, and then they make monthly payments up until you end up selling the house, or up until the person ends up leaving the property. And at that moment, you cancel the policy, but you no longer have any payments due because you pay month to month. If you pay for the full year for the renter's insurance policy, then you'll basically get your unearned premium sent back to you.
Oh, great. That's good to know. I wasn't aware of that. So it's worth taking a shot. Now, renter's insurance average, what would you state?
$15, $25, $35 a month.
Wow. Again,
cheap.
that would be the price of a what now? A number one at McDonald's for $15? Just totally kidding, but almost near there, right? What does Ms. Christina Weaver asked, what states do you insure in?
So we're currently in the state of Texas, California, and Colorado, and yet we do work with other investors that have a larger portfolio of policies in different states that we are insured, but we don't necessarily promote it. But if you do have insurance inquiry, just call me, let me know what state it is. It takes me about 2 weeks to get licensed there and to get up and running. And so we can definitely assist in most of the states. I can't say that I'll insure every state simply because the laws may be different in areas, but overall it takes me about a week to 2 weeks max to basically get licensed.
Okay. Sylvia Castañeda asked, what if the policy is in your personal name and the property under the LLC name? Is the property covered?
Great question. There's a difference between a business versus your residence. So remember, when you bought your property, you bought it as a business, regardless if you bought the property under your name. So no issues as far as the way it's written. Just know that the type of policy you buy, it needs to be consistent to how you're buying it and for the intention it was bought for. Because if an insurance company goes and finds out that this is you bought a residential policy for an investment property that someone else lives in there, they could cancel you, and if something happens, they can deny the claims.
And let me ask you this question, because that's a very good point. When an insurance sends you a denial and they find out, are they instantly denying you at that point and then serving you with a denial? Because what if during that process something happens?
Yeah, great question. So most of the time they'll give you a window, and then within that window you either recorrect or correct what you need. In some cases, for example, if you have 2 claims within 2 years that are non-weather related, an insurance company has the right to non-renew you, but they'll typically non-renew you on the renewal of the policy. If that ever happens, I'm stating to everybody, don't freak out. It's okay, because we as an insurance brokerage firm, just as I would assume most and hopefully other companies do, we represent well over 80 different carriers, and we're always looking for new carriers. So if you get a denial of rejection with one, we'll just have to move you to a different carrier. But now that we know what they're looking for will make sure that you don't put yourself in the same bind again and again.
Yep. And that's the point of having an intermediary there that actually will understand your needs, shop it, right? Or pretty much put you with the best carrier possible. Christina Weaver asked, do you insure single family and multifamily properties?
We do.
Okay.
There's not, if it's insurance, we pretty much insure it. We've insured horses and body parts. So there's not much we don't insure. So yes.
Okay. That's it. That'd be an interesting underwriter call there.
It was a hand model, so they wanted to insure their hand.
Really? Oh, I thought that was only on Zoolander, but wow. Mark Wallace, Dr. Mark Wallace is actually one of our members, and he is right now building, we're building a co-housing unit for assisted living in Tampa, Florida. So Dr. Wallace, welcome, sir. Really excited to be able to work with you. Mark asked, does vacant land waiting for construction in a few months only need GL insurance, or what kind of insurance?
Good question. So one is, yes, your entity right now just would be, the general liability would just be just enough, but I would highly recommend put that sign out there that says private property, no trespassing, because that is your notice that no one's allowed without permission on your property. That is your first line of defense. That is your responsibility. And depending on the area that you live in and or where the property is at, in some cases, some areas may even require you to fence that property in to avoid from anybody to come into the property.
Yep. We're real estate is in the people business, and there's a lot of people. An anonymous attendee asked, does the GC's insurance cover the workers?
Yeah. The answer is it covers the owner of the company against the damages that the company did towards the client or the person who got injured. So it could be an employee of the company that caused it to someone, but it does not protect the employee. It protects the entity, the company, which is you. So if you're looking to protect the actual employee, now question, are you asking if they get injured themselves? Well, then that's workers' comp. If they are a W-2 employee, then you need to get workers' compensation insurance. If they are a individual that is a subcontractor, this is where I'm advising you to make sure that they get their own insurance and add you as an additional insured, because it is a lot cheaper for you because as far as a cost basis, because it'll cost you between $50 to $150 for them to add you to their insurance policy because they're a subcontractor. And by definition, a subcontractor is self-employed, which means it's their own business.
And let me ask you this question: to $100 to $150 to get that insurance installed or activated, can you pay that? Is it okay to do that, or do they have to pay for that?
Oh no, it's irrelevant. They don't care where it comes from, as long as it's paid. And in some cases, they might not even charge a fee. They just add you as an additional insured.
Perfect, guys. No reason why not to. Richard Hall asked, are you seeing health and wrongful death lawsuits or claims related to COVID where a tenant is pursuing landlords for not adequately mitigating potential health hazards in the property? Great question.
Yeah, beautiful question. Guys, ladies and gentlemen, we are living in an unknown world, and we keep changing and keep adapting. As I mentioned before, we live in a litigious world, and people will sue for anything. Especially imagine if you're really ill and or sick. They will search and look at where they can get money simply because either they don't have it or they don't have the right insurance to protect them. So the answer is yes. There are current claims out there in the market right now of individuals that either contracted and or were diagnosed as COVID, and they claimed that it was for they were contracted at a place of work or at a place of location. Here's the thing. Just as much as they would like to file a claim because they can and it costs them very little to do, it is still their job to prove it. It has yet to be proven that it actually came from there.
Correct.
And that's the hard part.
Right.
So This is the reason why insurance is important, because it gives you peace of mind. Because the moment they file the claim or they want to come back and sue you or open a claim on it, it is then taken out of your hands. The insurance policy will give you an attorney, pay for the court costs, pay for all expenses up to the limits of the policy, including that if you lose, it pays what they reward up to the limits. Anything in excess of that, you would be liable under your own exposure.
Mhm. Guys, thank you so much, everybody, for the questions. Jason, if it's all right, we still got a couple more to go.
Yeah, for
If
sure.
that's okay. Let's take a look here. Are you able to write policies in Florida for new builds?
We can. Our license needs to be, I believe it's still up. We don't have any clients up there, but many clients up there, but I believe we still have an active license
Okay.
there.
Franco Montano, good to see you again, Franco. It says, if you're a flipper, would E&O insurance cover me if the entity is sued claiming a failure to disclose in a property disclosure when I sell a property?
So E&O is probably not the policy that would cover you for that. So read the question one more time just to make sure that I have the process.
It says, if you're a flipper, would E&O insurance cover me if my entity was sued claiming a failure to disclose in a property disclosure when I sell the property? Basically, the seller's disclosure, you didn't disclose. Is that what E&O insurance would be for?
Yeah, no. Errors and omission, that would not apply. If you are, first of all, number one, if you, in the seller's disclosure, you have not only a moral, but a responsibility to disclose everything that you know. And by you failing to do that, the contract that was written, whether it be through TREC or through whatever state that you apply on, it indicates within there that you are disclosing something that is intentionally to hide something or to avoid from disclosing something. You would be held liable regardless. The insurance company will not protect that because that's something that they don't protect. They don't protect against negligence, and they don't protect against anything that you have deemed to be liable for because you did something to cause that claim to happen.
Okay. Another question here. While you mentioned identity theft earlier, I believe most homeowners and business policies now offer an exclusion endorsement for that. But do you have some best practices prevention tips to try to minimize one's exposure?
Yeah. So one of the things that I briefly went over is I own a company called Shield, which is a cybersecurity counterintelligence company. And our biggest thing is getting people to understand that you, and I'm pointing to everyone I can't see, including Diego and even myself, we are the weakest link. Okay. Not only in our businesses, but in our homes. Our children are being attacked. Our small to medium-sized businesses are being attacked by individuals around the world every single day, simply because of the fact that you and I were accustomed to getting information like this all the time. Number one rule, and here are the basic rules that I'm asking you to protect yourselves and your family and everything that you work hard for. Number one, slow down. Slow down and read what you're actually, when you open up that email, read. Make sure that that email is coming from someone that you trust and know. If you don't, I want you to consider this. It only takes, my name is Jason. It only takes the ability to change the A and the S and switch them for that email to be someone that's hacked, that can hack you. It could be a link that's embedded within the body of the email that just by clicking it will allow them into your computer. Number one rule, slow down and read what you're actually reading. Number two, do not open an email. So let's say you go through your emails and you click on the email, and you know how it opens up and it automatically takes you to the very next email. If you don't know the person, and if it doesn't sound right, if it doesn't read right, if it's asking for something that is related to information, passwords, money, and or access, the answer is, if you don't know them, delete it. Why? because if they really want you, then they'll come back for you. At the same time, if there's a telephone number there, then call them to validate and verify that information. Number 2. Number 3, if and when you do happen to hit that link and or something arises in the situation where you feel like you might have made a mistake, immediately change your passwords to everything. Your banking, your email, your CRMs, everything. Change your email to everything. And I would highly advise that use a company kind of like LastPass. LastPass is one company, and there's several out there, but LastPass is a company that I use. And what it does, you put all your passwords from all of the things that you have through LastPass, and then LastPass encrypts everything that you're involved in, everything. So every time you log into your website or your banking or your checking account or whatever, it'll actually give you a LastPass password so that you can log in, but it's protected. It is, imagine this, your home. I can break into it. What would you do to make it harder for me to get in? You would put bars on the windows. It's a deterrent. It doesn't stop me from hacking you. It just makes it harder for me to hack you. And those would be the top items that I would say.
Great points. Let's see here. The next question we asked here, it says, can you have the tenant add you to their rental policy?
Can you add? Yes, as an additional insured.
Okay, perfect. Great question there. Do you mean if you rehab a property, you can ask the general contractor to add you to the insurance policy, just for clarity?
Yeah, so the general contract, so you're hiring a general contractor. They have their insurance policy, their general liability policy, right? You're going to tell them that you're requiring them to add you as a additional insured to their policy. Yes. Okay,
great. For a rental property with a tenant, I use a property manager. Should I add the property manager onto the insurance for the rental investment?
No, they have their own insurance policy. That's a complete separation. You're hiring a third-party agency to manage your property. That is their responsibility to have their proper insurance. What I would recommend is you asking them to verify that they do have insurance in case something happens, so that if they come back to claim something on the property management because they failed to do their job, it doesn't fall back on you because they didn't have insurance.
Excellent. And guys, one last question here. And thank you so much, everybody, for asking questions. What is the name of the insurance to buy for rental investments again?
Number 1, general liability. Number 2, builder's risk. And that one is the builder's risk is the policy, is you're buying a policy while you're rehabbing the property, whether it be to flip or to rent. You're basically renovating it. During that period of time, it's called builder's risk. When you finish the builder's risk, when you finish the renovation, then you're moving into a tenant dwelling policy, which is a permanent policy for that property up until the moment you no longer own it. And then the last one is just the renter's insurance policy that I highly recommend that you require that as people rent your property.
And as we said, some of them are as low as a number 1 at McDonald's and a big screen TV at Walmart, guys. So just insurance products, don't overlook them. Here's Jason's information with IMD Insurance and Financial Services. Feel free to reach out to him. He's a wealth of knowledge, as you guys can see how he's helping you and wanting to make sure there's clarity. I've worked with this company before. A lot of our members work with him, and they understand what they're getting into because Jason also makes sure that he puts himself into the world and the investment as a team, right? Have that person as a team. I want to thank everybody that's joining us and a lot of our other sponsors and affiliates that we have for the SVI family. Go ahead and click or scan the QR code. You can find us on all other social media platforms such as YouTube. This is going to be broadcasted on YouTube, Instagram, and Facebook. And for those of you that wanted to know more about SVI and our wonderful one-on-one platforms, just go to investorrealestatetraining.com. We have a great ebook there that's free for you guys about mitigating risk. You find your one-on-one sessions there. And also know for all the realtors nationally that we hold monthly free realtor training. Today we had one, which was amazing. We had people from around the country. So every month we hold free realtor trainings on how to work with investors if you're a realtor, and vice versa. And then just always know that we have our webinars every other Monday from 6:30 to 7:30 Central. Jason, I want you to close the floor if you don't mind. I want to thank everybody that joined us this evening and asked questions. What are the last words?
Just remember that you don't need to know everything. You just need to know who to go to. And if given the opportunity, whether it be my team or regardless of who you choose, just know that the insurance companies and the insurance brokers need to be part of your team. Consider us as an extension because we're there to protect you.
Perfect.
Thank you.
Well said. And here's Jason's information one last time, guys, for you guys to have it. Take a screen print, or as it was noted in the chat, if you want a copy of this presentation, you'll be able to see it on the YouTube channel for StratiVentures, or find us on all the other social media platforms under StratiVentures. Jason, thank you so much for your time, and everybody, enjoy your family. Have a great evening.
Bye-bye.
Bye, guys.